Okay, here's a look at the E-mini S&P for Friday, April the 16th, 2010. When we left yesterday, we had mentioned that there was a few support areas, but one of them in particular was around the 450 area. And by the way, these are our market profiles. This is today's regular trading hours profile and its corresponding volume profile. These two profiles here are what occurred in the overnight session, and this is what occurred yesterday. So we knew that yesterday's low was a critical low, and that if the market could break down below that, it could have a pretty good run. And we knew that the 85 area was one of our major support areas. We also had some possible support in around 97, and as you can see, when the news was released that the government would be suing Goldman Sachs for fraud, the market, of course, basically just fell out of bed. So this is a pretty severe down move the market had today, and it could be the start of some more selling. So we're going to monitor to see if the market can actually get back up above the 94 area. That's looking like it's some sort of resistance at this stage of the game. And so along with the 94 area as possible resistance goes right on down to that 85 area. So that's really the area of containment for right now. If it can get below 85, it's likely to drop another good amount, and from that 85 area, so from that 85 area could get all the way down quite possibly. Well, the next support would be around 78, so that would be the next price to look at. So in around 85, and then down to about 78 for the next support. Other than that, here's our more or less our support and resistance areas going into next week. This is a pretty severe down move. I think it remains to be seen, though, whether or not it's a reaction to the news or it's really the start of some new selling. And at this stage of the game, I would say it was just a reaction. But I think we need to give the market a little bit more time to make that decision, i.e., see what it does Sunday evening and then Monday, maybe even into Tuesday, before we can, make that kind of assessment. We also like to use the market profiles from the regular trading hours only. It gives us a little bit of a different look, so we also use them. Here is our software today, and we ended up with about 4 trades today. We had a nice early long right in here which caught this up move, so that was our first trade of the day. It worked out really, really well. Market only moved a tick against us and then moved almost 4 ticks in our favor, or 4 points in our favor, so that was nice. When the market sold off here, we ended up having another short in here. Now it did move to both of our first objectives that we were filled on. Unfortunately, it just nicked us right here on that final partial. Otherwise, we would have been on board for some additional 9 points. Now, what I'm referring to here, of course, is strictly the mechanical type trades. I'm not, there's no judgment here at all in these kinds of trades. So knowing that, what was going on here, it certainly would have made sense to adjust that stop. Not being in this move as it went down, we had another mechanical trade in here, which did stop us out, but we had another short in here. So we ended up with, this would be the second, the third, and the fourth. Now, the third and the fourth trades really were part and parcel the same trade. If you only took the third, you would have been stopped. If you'd taken the fourth, it would have been just fine. If you combined them and took part on both of them, then you would have been fine as well. So, but strictly from a mechanical basis, the third trade there, which was entered in here, was actually a stopped out trade, whereas the fourth trade here was a great trade on board, and the market dropped some 11 points or something like that, so it really had a big move on it. The next opportunity that we ended up by taking advantage of was when the market sold off here and had a bit of a bounce. And so we were able to get short in here for the fifth trade and able to take part in that down move right there. We didn't actually have another trade, which was here, but we also had our major support right here at 85. So because this entry was in essence right at or within a point of that resistance area, even though it was a short trade, it was a very aggressive trade because, as you know, when a market comes down to support, it will often dip a little bit into that support until some more of the buying comes in and really restricts price from moving lower, and then actually gives it a lift, which is obviously what it did here, backed off, and then had these other movements. The late sell-off here, though, is somewhat suspect. I mean, it does look like this support at 85 is likely to get tested again early next week. If it doesn't, the market starts to rally and gets up above 94. Then it's going to have another leg up, and then 1200 area would be the next known resistance area, or target, if you will. So that's really what we're going to be looking at going into next week. So have yourself a really good weekend. Thanks for taking the time to view this. Of course, if you want to get a hold of us, please do so at info@eminidaytrader.com. We'll see you on Monday.